Let's pick up this problem starting at step 3 in the process, presuming that you already have a problem outlined above, and in this case, are given a series of assumptions. So moving on to projecting an income statement, revenues would be equal to the amount of rent you would earn per unit times the number of units multiplied by the number of units that are occupied for 12 months a year, plus the rent on parking multiplied by the number of spaces for parking times the number of parking spots that are occupied multiplied by 12 months per year. We get 127,800. Since none of those numbers are going to move, I'm going to use my F4 key to put dollar signs in front of both the row and column reference to lock the cells, because for this problem, everything will be the same in every period. For cost of goods, let's go ahead and sum up then the three that we agreed are cost of goods, and then multiply those by 12 as well to get our annual cost of goods. Again, since all those numbers are in the same place, we can lock the references because every number here was going to be the same for each of our 10 years. Copy and paste our gross profit across. Then, this time, when I sum up all of the other costs here, during building the formula, I can use my F4 key to go ahead and lock those so that I can go ahead and estimate out for our entire 10-year period all of our sales, general, administrative costs, EBITDA being the sum total of those two. The first subtracting from the latter. I didn't say that right at all. EBITDA is equal to gross profit minus SG&A. All right. Depreciation is going to be $675 per month. That doesn't change, so F4 it. Multiply that by 12 months. That doesn't change. F4 it. Go ahead and copy and paste that across to get our EBIT as equal to EBITDA minus depreciation. Get that going. Luckily, there's no interest in the problem to concern ourselves with. EBT, EBIT minus interest. And then tax is going to be equal to EBT times this tax rate, which never changes. So we hit F4. Telling us then, are we profitable in any given year? We would have $13,230 worth of profit. In the problem, it was indicated that the payout rate is 50%. So let's go ahead and document that assumption for us so that if we calculate dividends per share, if we have $13,000 in profit, of which we pay out 50%, that means we're paying out $6,600 in change, but we have to pay that out to all of our shareholders. So if we look into our assumptions, we see that there are 10,000 shares to be paid to. So everyone is going to get 66 cents. Notice, because I didn't do my locking correctly, I'm going to go ahead and reapply those so that I don't get this div zero nonsense. So there are my dividends. It was also given, assume that the future price is 125. So if I'm a shareholder in any given period, I'm going to get both dividends and, if I were to sell, a future price. So in the second year, in the third year, in the fourth year, and etc., through the 9th year, I'm going to get 66 cents. But in that last period, I get both the 66 cents and the $125 as my sale price. I need to now calculate how much I would be willing to pay for each. So the present value with a rate that is 9%, which I'm going to lock. The number of periods I'm not going to lock because they're going to change from 1 to 2 to 3 to 4 over time. There's no payment. And then just so the number looks positive, I'm going to hit negative in front of the future value, and the future value is the total, so that when I select that, that comes out as a positive number. That formula is the same all the way through, so that in the last period, notice we're taking the present value of a rate that we locked at 9% for 10 periods away, where we're looking at the future value as being the total of all my cash flows. And once we sum those up, we can then determine that we would be willing to pay up to $57.05, whereby this gentleman is asking us to pay us $100 with a goal of raising $1 million. That's not our problem. What we determined is based off of the financials that were provided for us, based off the income statement and payout ratio, we could project our own predicted cash flows so that we could discount them at an appropriate rate and come up with our maximum price.